for having Dame Edna Everidge behind me. Well, not really apologies, because pays tribute to the lady or man. There she is. I will have to change that. Just bear with me for 2 secs. And I shall. There we go. That's me. No, that's not me. I've lost my background. That's bizarre. There we go. Rightio. As I was saying, thank you for joining us for Trading Buddies on this Monday, the whatever it is, 24th of April in 2023. It's an important day in Australia and in New Zealand and in England and France, as we celebrate a thing called Anzac Day tomorrow, which of course is a remembrance of those who served in conflicts, started out as the World Wars and now has spread itself to all conflicts. Of course, there's a big tradition of Australian and New Zealand troops in particular in that terrible place called Gallipoli. Won't go there, but if you are a veteran, thank you so much for your service to our country. And we trust that you have a wonderful celebration tomorrow, if indeed you are a veteran. And once again, thank you so much for your service and allowing us the freedom that we do have. So, happy Anzac Day for those who celebrate that tomorrow. Righto, let's get in and see what's going on around the place. Quick update on the Euro trades I was in last week. I say was in. Both of them crashed and burned. One was Euro versus the dollar. And we were tipped out of that this morning by a very, very small margin. But that didn't play out. Well, it hasn't played out yet, let me put it that way. And I do see a few things that are yet to play out that I had in my eye. This is still one of them. So it's Euro versus the dollar, still looking like a false break to me. Sadly, we were tipped into that by the barest possible margin, and now we've been tipped out of that by the barest possible margin. So patience required there, and see if we get another setup. Euro versus the Aussie, similar thing, but playing a different game. I was playing a reversal bar with 2 inside bars attached to that, and that looked to me like it was ready to go south. Incorrect. Hit the trade line. Should have taken profit there. We took profit a little bit lower on that line. You can well, we didn't take profit. That was the problem. And go Paul P. And that has now been taken out also. Important to note that when you are looking to trade reversals, as both of these were, that you only go in very, very light. On both of those occasions, it was 0.25% for me, so I've suffered a 0.5% loss. If this does turn around, when this does turn around, and hopefully I'm on board that, we should get that back fairly quickly. So although nobody likes to lose, me included, those two were losses and a net loss of 0.5%. Righto, let's move on to something positive, shall we? Oh, nothing positive. Gold, that's where we need to go and see if we're going to trade this breakout. Well, we are going to trade it, but it's just a matter of whether we're really interested in it or not. Last week was pretty good, I think. I think Monday we got a winner, and Tuesday, got no idea. Wednesday looks like it was a winner. Thursday looks like it was a winner. Oh, yeah, we traded that on Thursday, didn't we? But it was last Monday that our entry was very close. Where was it? Can't remember now. Where's the 9 o'clock bar? 8 o'clock. 9 o'clock. Now, that would have been a loser, wouldn't it? Because it would have triggered. Is that Monday? Yes, that's the week. So Monday was a loser. Tuesday, I better hurry up here, by the way. Tuesday, 9 o'clock was there. So if you got long there, you should have taken profit on DR1 or something like that. Wednesday, outright winner. Thursday, again, should have been an outright winner to the weekly pivot. And Friday, absolute corker. Well, look at that one. 8 o'clock, 9 o'clock entry there. I wouldn't say it was a corker. Big risk for little reward. So there you go. All right, we have ticked over. So let's have a look and see what we've got. We've got a high of 1985.39. So 1986 would be our entry. Dreadful place to enter the market. Absolutely dreadful, but we'll do so. And the short will be entered at 1976. So 1996, sorry, 1986 to 1976. $10. In other words, right, I will set the sell first. No, we won't. We'll set the buy because it just defaulted to that. Once again, if you are trading these, you need to be aware that they are very, very dangerous on this occasion, but we're not using any filters. So please, please, please do not put any meaningful money on this until we've proven it to be a system that wins consistently. That generally takes 3 to 6 months. So you just got to be patient. 1986 was the buy. And the stop loss was 1976. 1976, that's the day that I started work at NBN Newcastle. Well, the year, anyway. Take profit on the long. We'll ignore the pivots and go up to this level here, which is below DR1, but on a support and resistance area. So 1996. So we've got it's actually 1997. 1997 was the year that, it's going to be boring for you guys, sorry, that Newcastle won the, what was it called then? NRL Premiership? No, I can't remember. It was a breakaway for the first time. What a game. Right, so the long is in place. And for the short, we want a sell stop at the same risk. So 0.03 for me. That doesn't get me into any trouble at all. It's a sell stop at 1976. And the stop loss will be at 1987, did I say? Did I say that? Because 1997, sorry. 1986. Sorry, I just went with the take profit there. 1986 is the stop loss for the short. The take profit level, I've chosen the open close of these two bars here, which is before DS1, and not a great reward to risk ratio at 1970. 1970. As usual, if you are going to take notice of these or follow them, the rule's simple. One breaks, cancel the other, and set take profit levels. So all out there, all out there. Pretty simple. Greg, the game all young boys dream of come from behind and score in the last year. Yeah, what a game it was, mate. What a game. I was in Lightning Ridge Golf Club at the time and just going off my head. Going off because I'm from Newcastle, of course. Righto, that's gold set up for the day. We're going to talk about gold. Dear, oh dear. Just Manly. You're a Manly supporter. My God. Tommy Treboyek's in trouble again with his groin. I've been in trouble with my groin too. I'll go no further than that. The gold. We'll be talking about gold in spades today, I would imagine, because it's at a very, very interesting point. I'm completely undecided, I've got to tell you, but a little hint, 1 little, 2 little, 3 little amigos might be sitting there for gold, and it's sitting on an interesting place in that I've got low test bar, low test bar, low test bar. That's normally a situation that I thrive on. I'm just not convinced that's the case on the daily chart just yet. We'll see it. It's got a lot of work to do to get through that level, really does. But monthly pivot sitting there like a wicket keeper, just waiting for a slip up here. As I said, Ash and I will probably talk about gold a little bit in the show today. As far as what I'm interested in this week, I have replaced my weekly order on Aussie dollar. Now, I've had this set for 2 weeks in a row, I think. This is the third week in a row. Maybe I should have traded that bar, but no, dangerous place. So I've still got the weekly bar trading short underneath there, and I've got my stop loss above the weekly pivot. So I think if I'm wrong, then if I'm wrong here, this is going this way. So that's why I don't think it's necessary to put my stop loss any higher than where it is. You could put it up there if you really feel like being in a comfort zone, but that would give you a very, very poor reward to risk. So no interest to me. If you're still interested in that position, the reason I am is because nothing's changed. Everything is still inside this selling bar here, and it's the third really decisive selling bar that dragged us back underneath not only that trade line, but the horizontal level that's got a bit of form over here as well. Yes, it does look like an inverted head and shoulders, granted, and that's fine. If this bounces off the backside of this trade line, then who cares? Well, I'll try and pick it up as a long later, but if it doesn't, then if A or if X doesn't happen, then generally I'm a fan. That Y probably will. And that's why I'm thinking short here. Half off at the first take profit level, which is 64.20, I think, from memory. 64.21, sorry. 0.6421, and which is about 1 1/3. The stop loss is 1.3 to 1 for TP1. And then if it does go south, I'm probably thinking down here for a second take profit, maybe there somewhere. But maybe all out as well, because I'm expecting that the US dollar at some stage will weaken further. But I think it's still the US dollar at this point that it won't shy away from, either short or long. It just wants to hang around here. 1, 2, 3 weeks when it first hit that level. 1, 2, 3 weeks gone. Is this the week that it takes off or breaks down? Probably, in my humble opinion. Still got a monthly pivot sitting up here, so I'm still thinking upside for the dollar at the moment, probably until it hits this 105 level on the dollar index. So I've still got that one in place. The only other one that I'm really keen on, I want Ash to give me a hint on this as far as maybe seasonality or commitment of traders is concerned, is Euro Pound. The reason I'm looking at Euro Pound is primarily because it's a complete and utter schmozzle in the current price area. That's a monthly chart. So you can see it's just been all over the shop. Tested the lows, tested the highs, tested the highs, tested the lows. It's tested the low again. So that suggests to me that we're still trading in a range, but it's ready to break. Which way it breaks is completely confusing to me at the moment. I've got to set up from a slingshot point of view to go long above this bar, and I've got a slingshot set up to go short below this bar. Neither one is really attractive because we've got a support level here and we've got a resistance level here. So the reward to risk is very, very poor on the first part of that trade. On the second part of that trade, however, it gets a little bit more exciting. So that's a weekly chart I'm looking at. I just want a hint from the market as to what's going to happen. I suspect we're going to get a false break first. And that should be my cue, I think, to go in whichever direction. But we're getting to the pointy end of the toothpaste tube, so something's going to spurt out here. I've got no doubt about that. When it does, I just want to be aware of the follow-up direction. So let's bring Ash in straight away. G'day, mate.
G'day, mate. G'day.
Use
a colloquialism. Yeah, very good, mate. Yeah, very good.
That's the shot.
Yeah, interesting.
Euro Pound.
Interesting one, mate. Yeah, I've traded this a few times over the last few weeks with I suppose generally frustration. I'm with you. It's definitely going to explode one way or the other. I I would have thought it would probably go lower than higher. I think it's been, in this kind of overvalued area, euro dollar for quite a while. Sorry, euro pound for quite a while. The fundamentals suggest that both of them are pretty tight.
So no help at all, eh?
Not really. I mean, the fundamentals do suggest that the pound is maybe under a bit more pressure, but there are kind of other hints that suggest that maybe a little way out into the future, it's not going to be too bad. Well, not going to be as bad as the Eurozone. The seasonality is about flat over 23-year period. They're sort of like in cahoots. But it's when you get to the COT data where it does actually give you a bit of a bit more of a clearer signal. Because the COT data does suggest that the euro is the one to go for. The euro is very strong on the COT data, and probably the strongest currency actually on the COT data.
Yeah, so, it's flying, isn't it?
Yeah, it is. And you know what? When it comes down to the euro, I think the buying is really because of the expectation of what the central bank is going to do. But inflation in the UK is really sticky. I mean, it's sticky in Europe as well, but it's really sticky here. And we are at much more dangerous levels than they are in Europe. So that sort of starts to push you towards the pound, but it's really kind of touch and go. When it comes down to who's going to blink first, I think the market is undecided, which is why we're getting this particular pattern. And I wonder whether it will just come down to not who's going to blink first, because they'll maybe sort of like get to the point where they'll both do the same thing, as the rest of the market is seemingly starting to do. We got the Kiwi possibly sort of like at the end of its rate hike cycle. Aussie looks like it's there already. The CAD looks like it's there already. The yen hasn't really moved. The Swissy, very strong currency right now, but that could be down to risk. And when it comes down to
go with that one. The Swissy, I'm very interested in the Swissy because I'm still trying to get CAD Swiss long. I'm still trying to. Well, actually, Euro Swiss, I suppose, comes into calculations too. I'm waiting for the Swissy to weaken.
Yeah, do you know, I'm the same as you, mate. I think the risk to the Swissy is all to the upside. Sorry, all to the downside, I should say, for the Swissy. But because many of the currency pairs are in. They have the other currency first. I think of it as downside, but so upside. Sorry. So the dollar Swiss, I'll be interested in. CAD Swiss, same as you, mate. I'll be interested in, because if you look at this, and that's the chart to look on. The longer term time frame suggests the risk really is to the upside. Upside CAD Swiss and downside Swissy. But the fundamentals
just keeps going another way.
Yeah, it does, and this brings me to my currency pair of the day, and actually I've taken a trade and I'll show you guys, because it's just come back to entry price. So if anybody's interested, they can take it on. I'm not sure how good the trade is in some respects, timing wise. Is probably where I'm not too keen on it, but when it comes down to the picture, I really like this one, and it's the Kiwi yen, and it's also the Aussie yen as well. And I'll go through the reasons why I like both the Aussie yen and Kiwi yen yen as a short. The trade I've got on is the Kiwi yen, and I've chosen it because the setup was better, but I actually do prefer the Aussie yen as a short. But let me just bring in the Kiwi yen. So this is the Kiwi yen. I've taken the position on this level with stops here. Now I wonder whether this might just end up stopping me out, because it's got a climb that it could definitely try and take. Weekly pivots there, monthly pivots there. All I'll probably do is allow myself to get stopped out and see if I can get back in on the short side as it climbs. If it climbs, I'm at this first point, I'm just trying to get back to these lows. Now when we opened up, it was looking pretty good for me actually, because the 15-minute chart looked like it was holding under this level here. We closed down here, had a holding bar. This one's looking like it's trying to get back inside, and if it does, then and we've only got 15 seconds until this bar's closing. So if it does, that does suggest that this probably will get stopped out. But I don't really mind, because I'm going to, as I say, I'm going to keep trying to trade this one short. And the reason I'll trade it short is that seasonals aren't too bad for the yen. The fundamental picture is really what's pointing me towards yen long. And the reason it is pointing me towards yen long is for multiple aspects. The first thing is the potential for central banks to start pausing. And if that's the case, the yen may well have found its fair value. On the fact that the likes of the RBNZ have hiked interest rates, the RBA have hiked interest rates, so we might be getting close to fair value with the yen, and then it's about economic development. And if we are going to hit this recession, that puts me much more towards the likes of the yen and the Swissy than it would do the Aussie and the Kiwi. So weaker numbers from China, and we saw, we're seeing the Chinese stocks really collapse at the minute. So that does kind of suggest that that region is in a bit of trouble. So I'm looking at this one just to weaken now.
That's interesting. Sorry, before you go.
Yeah.
Why would that be? They're coming out of lockdown, or are they going back into lockdown? I would have thought the economy would have perked or picked up.
It did pick up, but just as we've seen in the West, the initial kind of surge seems to have subsided a little bit.
Yeah.
And I think that's what might start to happen. And we're in a bit of a strange phase where we sort of we're kind of passing the baton back and forth now, and we'll look at some of the growth metrics. But yeah, this one's interesting because if you look at this in a few different ways, you've got this symmetrical triangle here, and that brings us down to with a measured move. And I'm not aiming for the whole measured move. I'm aiming around about 1.5 to 1. So that brings us down to this zone here, which I think is a really interesting point. And I'll bring you one more. When I look at this on the daily, not the daily, when I look at it on the 4 hourly, the 4 hourly is like a bear flag. It looks like like this area here. If I shorten these up, it might be easier to see. We got that one there. That brings us up there. We got this one here. It brings us down there. And then you can see that we've got this bear flag here. Now, if that is a bear flag, then that gives us down to that even lower. So this looks to me like a relatively good place to see this get to, if it does break down in this first time of asking. If it doesn't break down in that first time of asking, the pattern will change somewhat, and then maybe it does get down actually lower. So the higher it goes, almost the more dangerous it could become for the Kiwi yen. But we'll have a look at the Aussie as well in a minute. But if this area, and I like this area, if you look at this area on a daily, then it brings us down to this horizontal level here. Now the lower one, I think, is also valid. I'm going to take these other ones away now. This lower one's also valid. It brings us down to maybe it's a little scruffy, but you can see that there is some support down here. It came down, it was supported, it was supported, it was supported. So somewhere in this zone here, there's probably a better buy zone than we are in right now. So I think a little bit more of a push to the downside could well be on here. So I'm going to hold on to the position and see what happens. And as I say, if it pops up, then I'll try and get back in again on the short side. And if I then bring in the Aussie.
You got a weekly game changer on Aussie yen, by the way.
Right. Well, I mean, I like the Aussie maybe a little bit more in some respects to the downside. And the reason I like it a little bit more is that when I compare the Aussie Kiwi is in this downtrend. Okay, it's found this area of support, so that may well switch things up a little bit. But if you look at this on a daily, it looks like it could actually retrace a bit further. You look at it on a weekly, it also looks like we might well be at a sell zone and we could retrace a bit further. So that suggests the Aussie might well be a little bit weaker this week. But they're both in difficult territory, both the Aussie and the Kiwi, when it comes down to seasonals and when it comes down to the potential fundamental picture that we're faced with recessionary concerns kind of floating around, and the possibility Obviously, the Aussie's already done it, but the possibility that the RBNZ also pause at their next rate meeting, and you know we're really high with interest rates for New Zealand comparative to other nations.
They tend to do that, don't they? They tend to lead, and I don't know if they're right or wrong or indifferent. I'm no economist, but to me it seems to be a little bit of an overplay at the moment by going 50 basis points. Last time they did anyway. Which also makes it interesting with that chart in particular, because Aussie paused. That's Aussie Kiwi, isn't it? Yeah. Aussie paused, Kiwi went 0.5%. Yet Aussie Kiwi rallies. Go figure.
No, that is an interesting one, mate. And I think it kind of it really does reflect on the economic situation that New Zealand's finding itself in. You know, numbers have been quite poor. So another reason that you know that one's okay. But the setup was better for the Kiwi yen at the time. I mean, I have to say it's looking like it's probably going to get stopped out. But the setup was better for the Kiwi yen at the time. So when I look at this, you look at this on the weekly, you know, big downward bar here on the Kiwi yen. Really. I mean, there's a few of them. You know, there's a few of them which show that there was going to be a pause here, which is why I'm really keen just to kind of like keep trading this down if it does stop me out. But we'll see, mate. And I think I probably will get stopped out, as I say. But you never know. I mean, it might be able to hold the top of its range. I think the fact that it's through the daily pivot's not particularly comforting. But as I say, there's maybe one more level to get through. It gets through there, and it's probably stopping me out. But then I'll try and get in here and make up that little bit of cash, and then see if we can get down to the lows. But the lows, where the lows become interesting as well, I think, is because there could be just a bit of a pattern along here. You know, we might be sort of like faced with that, which suggests that maybe that take profit might have to come up a little bit higher. But it does look like an M topping pattern, and if the M topping pattern was to break down, then actually, you know, there's the targets do really become multiplied to some really significant downside.
Well, your measured move off that range looks very very keen.
Exactly. So I'm just looking for a small bite out of that one, really. But we'll see how that one turns out. When we go round to the other kind of growth metrics, and you mentioned gold. Gold has seen.
I can't make up my mind.
Well, I mean, the fact that it's broken through this area here for gold does kind of show that that there is probably some further downside on its way. Now we'll just bring this up here. Difficult to know exactly where that pattern is, and in fact, let's make it a bit more conservative and do it there. I mean, is it a channel? Not so sure. It might be a broadening pattern.
Yeah, it'll do me as a channel. I like it.
Okay, so if that is the channel, then we could be looking at a measured move that leads us down near the monthly pivot, like by the looks of things. For gold, it hasn't got many days to get down there, but that could be a $50 move to the downside on gold, which is around about a 2.5% move, which is, you know, over a course of a week. I don't see why that wouldn't happen. What's going to drive the dollar higher? It's difficult, really. I mean, you've got lots of inflation data this week. You've got GDP numbers as well, and initial jobless claims. So there are a few things that could drive the dollar a bit higher. There was mixed data last week, and yet gold still started to move to the downside. Now, I think it could suggest that the inflation narrative is only one play with what's going on with gold. I think there was a lot of fear as well that drove the gold market higher than just the inflation narrative would have driven it. And gold has been on such a steep move to the upside. I think that a move back down again looks technically probable. You know, this area here, which actually would be the measured move of the channel. If you bring this down here, looks like it's going to be somewhere in there. So that near the monthly pivot actually brings you there, which when you look at it on the weekly, that's right on this area here. So 1943, which is, as I say, $50 to the downside, around about 2.5% move to the downside. Looks like it could happen. Then we go.
Still a double top there, man. It's still there.
Yeah, it's still
Hasn't
there.
been taken out.
No, exactly. You look at the FTSE, another one that looks to me like we might be starting to see some downside. And I'm actually quite interested in. Hold on, let me just see what this will be. Might just let that bar close up. Actually, let me just see. What's it looking like there? That gap's a bit of a problem.
They always are.
Yeah, the gap is a bit of a problem, but I quite like the FTSE for some downside as well.
You on a moment?
Yeah, maybe give me a moment, mate.
Yep.
I mean, let me just see how bad that would be. 12. Yeah, it's half the trade, isn't it? I might use the weekly pivot instead because that won't be too ugly. I think might just be a bit too early for me. I mean, I like the downside, but and even I like it from here as well. But it might, because of the gap, it might be a bit too early to kind of get into this. I think the weekly pivot's okay because then the gap becomes more of a resistance zone rather than needing to fill it before you get the resistance zone. So that would suggest that we're at resistance zone 1. So I think aiming for resistance zone 2 would be better. So FTSE pushes another 5 pips, 6 pips to the upside. I think I'll be shorting it because I just see some weakness. You know, as I say, right across the board. Nasdaq's another one. Looks like it is breaking down certain trend lines. Maybe this one could be suggesting something else. Yeah, that's the trend line there, isn't it? But that may well start to break down as well. And we're not too far. Remember what the saying is, mate? Sell in May and walk away. So we're not too far away from the potential sell seasonals in stocks. So so I quite like some of these, and of course that would play as well into the Kiwi yen. So few things to consider, mate. But it does look like the market is under a little bit of pressure. And we could be in a situation where the downside is probably the better way to go. Now that does mean that the Swissy could be a bit more tricky. And seasonally, I have to tell you that seasonally, right up until the end of the month, the Swissy is the strongest currency and the dollar is the weakest. So we've got maybe another week before we can possibly turn for the CAD Swiss long and the dollar Swiss long.
Well, I suppose at the end of the day, it's going to give us a better price if we can find an entry down there somewhere. But
yeah,
gee whiz, every time it sets up, sorry, you go.
I've had a few, mate. I've had a few attempts at getting into this Swissy dollar long, and because I've been getting out early enough, it's been okay. But I have to say, the chances of this popping to the upside, I think, are really high. But what are we waiting for? And we may well be waiting for the end of the month. And you know, it could be literally next Monday this one starts to rally, because the first week of May we have the next Fed decision. So there might be sort of some genuine reason to see the dollar Swiss rally into the Fed hike. Jordan's out today, I think. No, sorry, he's not out today. He's very light on data today. Jordan's out this week, and he's the governor of the Swiss National Bank. So Jordan might say something. You know, this is the question: what's going to drive the Swissy lower? Well, the data doesn't seem to be doing it so far, but maybe there could be an argument to state that the central bank does, in some sort of speech, say it, because actually inflation data in Switzerland's not too bad, you know, and we've seen an easing as well. So there has been cases to be made to suggest that this thing is going to turn around. But you know, you could look at the Swissy against the dollar, and it's been really strong. Yeah, it's dollar Swiss. That would be down. You look at it against the Aussie. I mean, incredibly strong against the Aussie. The CAD, really strong against the CAD. Really strong against the euro, really strong against the pound,
and
really strong against really strong against the Kiwi and also really strong against the yen. So we've and the reason I'm not bringing that one up is my eyes aren't instantly drawn to it. Swiss yen, where are you? I don't know, but there it is.
Yeah, it's way up there.
This is the Swiss yen, so this would be going in this direction. So it's the strongest currency on the board. And what happens when you get the strongest currency? It becomes very, very quickly the weakest currency for a period. Mm-hmm. So I think the Swissy is overvalued, and it's just waiting for the catalyst. What you trade it against is the other question, of course. But I like your idea of CAD, and I like the potential for the dollar as well.
I just saw a little hint while you were going through all those. Yeah. And I think there were only 2 out of all those 5 or 6 that hadn't broken support. And one of them was the euro.
Yeah.
The euro versus the Swissy. That looked to be... Is that euro Swissy?
Yeah. I think it was the pound Swissy. The pound Swissy here was the one that you sort of said, oh, that's interesting.
Okay, I thought it was euro Swissy. Where's my euro? Have I got a euro Swissy? No, I don't. Can you bring it up on a bigger time frame? What time frame do you want?
This is the pound, and this is where we are.
And the euro.
Look at that level. Goodness me.
Yes, indeed.
Touch. This is where we are, and look at This is Friday's bar as well. Yeah. So I don't know what the weeklies are suggesting. Yeah, it's a great level we're at. And the euro is this one.
There. Yeah, that chart. That's the one I saw. So that's nowhere near its lows. That's the one I saw. Interesting.
Yeah. Well, the euro for all its kind of supporters wouldn't be one of my favoured. Wouldn't be one of my favoured currencies. The euro I always see as a selling opportunity, really, because the fundamentals don't stack up.
And against the Swissy, it's so hard to catch as well.
Yeah, it wouldn't be one for me, mate. But as I say, this wouldn't be the. But I like what you were sort of saying. CAD Swiss to me, this looks like a potential opportunity. We're getting very, very close to all-time lows on certainly on this chart. But I mean, there's a point there and there's a point there, and we're through that level. However, it's going to get volatile. These areas do get volatile. Actually, talking of volatility, one other point on this, it did close there just the other time, but you'd want an entry just above that bar, right? And who knows where that could go? That really could start to kind of catapult its way up.
I couldn't enter at the moment. I've got to wait for a reversal pattern, and it's just not there.
Yeah, me too. I'm waiting on that one as well. Talking of volatility, the VIX has also got this gap down here, but just found a little bit of support here on the weekly. So another one that is probably close to its lows, maybe. I mean, it looks like it's through some levels there, but close to some potential lows here. So this could flip. So I think that there's a case to be made to say that volatility could pick up in some of these markets, and the Swissy is definitely one of them, which is why I'm really keen on trying to find a short in it. Not so short Swissy, so selling the Swissy off against something. What that is, I'm not 100% sure. Probably the dollar I'm moving towards, but I quite like the CAD as well. I'm with you with the CAD, but you look at the Swissy down here against the dollar. There's this level here is a really interesting one. There's some resistance there. There's some support there. A hint of support there. We're very close here. Now, of course, it could come down a little bit lower, but we look like we are in a buy zone. This whole area looks like a buy zone. But as you say, we need to see information which suggests it's turned, and at this stage, it hasn't. Even last week's bar didn't give us anything. And actually, there was some pretty good PMIs from the United States last week, and it still didn't turn against the Swissy. So we're still waiting on this one. This is what I want to see. This channel broken.
Is there a reason why the Swissy seasonally is strong at this time of year?
Oh, I mean, that's a great question, mate. I mean, there will be a reason.
Unfortunately,
I don't know what it is. Yeah. I suspect
covert, hidden operation.
Yeah, well, the Swiss is a really difficult currency to mine for information in comparison to others. You know, the dollar's really easy because they just flood the market. They just flood the internet with information, so you can find out what you need to about the United States. Same with the UK, and similar with with Europe. When it comes down to particularly the Kiwi and the Swissy, a lot more difficult because the economic data, because they're a much smaller economy, they tend to release the data after a much longer period. You know, it's not kind of on a weekly basis like it would be in the bigger economies. So so the Swissy, you're kind of waiting on it, but yeah, very difficult, mate. Very difficult for me to know what it is that's driving the Swissy so aggressively higher. Because it may well be to do, as much as anything else, the strength of the economy in comparison to the concern that is out there with the globe right now.
Yes, that's right. It's just adopted its norm as being a risk-off currency.
Exactly. Yeah, the safe haven. Exactly. Yeah.
Yeah. Whereas, you know, and that plays along with gold as well, I suppose, why gold's rallied, but now gold's come off. It kind of defeats that argument a little bit. And you know, gold is just one of those things these days where everybody's trying to get on board and still think it's going to 10,000. Some people, or one person that I know of, still think it's going to 1,000. So who am I to argue against anything? The chart's telling me it's still double top, lower high. So
yeah,
I've got to be still thinking bearish or selling rather than buying. I can't really say bearish at this moment, but I can say I'd rather be a seller than a buyer right now. That's the only thing I can say.
I am going to, the FTSE looks good here, so I'm going to take it on. I'm just going to wait for, probably wait for the bar, mate. Yeah, you can take the screen for a bit, and cool. We'll come back to see if I get into it.
Yep, you get sorted and give us a yell when need be. So I'm going to go with Aussie yen and tell you what I see on Aussie yen, because Aussie yen came up this week as a game changer bar, as I said, at a resistance level. So it's been support through here. Sorry, it's been resistance through here. It's been support through here. I wonder how much that level is in terms of, well, if you brought it down to there, it's got more credibility longer term. Support through here, resistance. So that level's pretty cool. So 90.30 is around about where that level lies, you know, give or take. Those levels are obviously not super accurate, but, you know, give or take 10 pips either side, I think you're pretty much on the money. So there's that level that has been broken. We've come back underneath it. I think the only thing I would need to see on the daily chart would be a retest, maybe even of the pivots. So that makes sense to me. Aussie yen. But, yeah, ring low, ring high, sorry. Evening star, maybe even. Came off its low. That's the only problem, I guess. I think a pivot test.
I'm taking the FTSE here, mate. I'm just getting into the FTSE just to let you guys know, and I'll just tidy it up, and then we'll have a look at it in a minute.
Right, cool. So that, I suppose, is the signal there if you wanted to sell this. If you actually take notice of it. Let me get rid of these lines and put them where they belong. And we'll try and work this one out. There we go. So let's bring it down to the daily chart. And what do I see? I see a double bottom. Some people would say it's not a double bottom because it's not exactly level. I don't subscribe to that theory. So for me, it's a double bottom. I see that level that we spoke of, 90.29. Doesn't look that strong on this chart, which is the daily chart, but going out to the weekly and monthly, it is a strong level, which has been broken and proven to be false at this point. And that, as I said, is a ringed high or ring high, whatever they call them, or evening star, even whatever you want to call it. The only problem is it's come off its low, which means to me that it's going to find a little bit of support there. And if it doesn't get through resistance, then guess what I think happens next? We go down to the monthly pivot. So today's bar for me is critical. And if it were to close on or above the pivots, I think there's good reason to take a short. But the monthly pivot is an issue. It has been broken and rebroken, so it's not that big an issue, but it is there. So that would also, no, it won't actually. It'll make it worse. And what I'm about to show you is that it still gives you downside. So a retest of that trend line as well. Okay, then if you put this trend line in, it's a different story. Wow, the market's so finicky at the moment for my system. It's not funny. I'm seeing downside one way and I'm seeing upside the other. Yeah. That makes it very, very difficult to trade. So I can't go short at this point because that's saying it's a buy zone. But the buy here is impossible for me anyway, because you've got a pivot sandwich right there, the daily pivot and the weekly pivot absolutely together. What's that going to do? It tells me that that's going to be a resistance area. So I still think short is the way to go, but I've got to see price get or test these pivots before I did it. And under here, take some profit there, or get yourself safe in the market. You don't need to take profit, just get safe, and then let it go down to here. So that's my ploy on Aussie, and could be a little bit early. So close under here, maybe close under here, retest, then I'd be far more confident in that going short. Right, mate, what was your trade?
Okay, so it is a FTSE short. Let's have a look at it and see what we got here. Just got closed out of that Kiwi yen. So let's see if this can kind of this can balance the books a bit. Of course, I'm going to try and get back into that Kiwi yen, but let's see if this balances the book. So, FTSE 100 short. Now, it's just basically sort of like trading it off the weekly pivot. But the reason it's coming off the weekly pivot is also this gap. You probably can't see it that well there. This gap here, and anybody that doesn't know about gaps, they are here. You see this down to there. There's the gap. It's where there was no orders between this point and this point. Now they can do one of two things initially, but what they tend to do is close. So the market abhors a vacuum. It doesn't like a vacuum at all. So eventually this thing will close. But it's a bit of a misnomer because it could close in an hour, it could close in a day, it could close in a year, it could close in 10 years. We just don't know when it's going to close. It will close eventually. Is about as much as we can say. So what that suggests to me is that I've got to expect, and I've got to be able to sit through the possibility that I get in here at this weekly pivot, but it's coming back to close the gap before it goes down. Now, of course, you could scale into the position if you want to do that, or you could just sit through the fact that it's going up there. Now, stops will still be up at this zone here, which I should probably put in place. Stops are going to be just above this point here. Now, targets, if the stops are up there, then we've basically got 20 pips to the upside, but down here, there's at least 30. So we got a 1.5 to 1. Just to get back down to the low of this bar. Now this is a general area, but if we look at the 4 hourly, we can see that this is bumping down here. We keep bumping at these lows down here. So I probably won't aim for anything more than the lows, but it looks to me like we could see these lows, at some point, and eventually it's going to go through. but maybe it might be better. It might be better at that point to see if it goes through, comes back, and then take the trade to the downside. I'm good with 1.5 to 1. I prefer a twos, but I'm not going to try and fight this area of support because it continues to bounce. So I'm not going to try and get in here and look for it to come down. But I do think that there's enough suggestion that we could get some further weakness in the market over the course of the next few weeks because of recession concerns. We've got GDP data from the United Kingdom this week as well, so that may well start to push this lower if we start flirting with recession. Same from the Eurozone as well. And what I tend to do is check the other indices, check what's going on with the other indexes. Now, what I see is a gap also with the CAC, so a bit of weakness there. And China's Stocks 50 is a good one because this one's actually had its session, and it was below this area, I think. No, it's not. That's in the wrong place. It's below this area. It's closed below that area, which does suggest that it could be a little bit more downside with the China Stocks 50. Now, of course, the US market isn't open yet, but this is looking like it's under stress. We looked at the VIX, so the FTSE's been surprisingly resilient, I think, over the course of the last few weeks. But with inflation high, it does put pressure on the pound, and if it puts pressure on the pound, it tends to put pressure on the UK companies. I can see this morning that it's a little bit benign. We haven't really done a lot. Rio Tinto's in positive territory. Banks are a little bit weaker. Oil and Shell are a little, actually Shell's down over 1% and BP's down near 1%. So it looks like the oil stocks could be weakening. And if we flip to what's driving that, and we look at the price of WTI, there's still this gap to fill here. Talk about gaps needing to be filled. This one's taken a few days, but it looks like this is coming down to fill this gap down here. So that happens, that's going to drive BP and Shell lower, and also the FTSE 100 lower. I also like to look at
there's almost a scale in there, but from last week's break in trade, which was the one candle false break trade. If you're still in that, I think an entry underneath Friday's candle is perfectly valid. If you're not in that, then I think it's a little bit dangerous at this point until that pivot's tested and the breakout area is tested, because it hasn't been at this point. So it's very, very tricky if you want to enter now. But if you're in the short already, I think, a little bit of add wouldn't hurt.
Yeah, I agree with you, and it looks like it might well test this pivot before coming down, but it does look like it's on its journey to the downside. And it looks like this gap needs to be filled before it goes anywhere higher again. This also runs into the possibility that we see some strength in the dollar as well. Now, the other one to look at is copper, and copper also looks like it's broken down this level here. Now, the reason to look at copper is that of course, now on MC4 we don't have a whole bunch of opportunity, a whole bunch of things to look at. But if you think about things that suggest growth, obviously oil is one of them because people need energy to kind of move goods and services around the world, and copper because people, when times are booming, people tend to build, and copper is something that we can look at. So seeing some weakness in copper and silver does suggest that we could be heading for some economic contraction, which puts us right back to the FTSE again, and suggests that some downside is probably on the cards. And as I say, the FTSE's been on a tear, mate. I mean, it's no stopping.
No, that's right. We spoke about this, after it got to its all-time high, and then went over the waterfall. Just come straight back.
Yeah, this area here, which is it's about 200 away. So you're looking at around about, near a 3% drop, 2.5%, 3% drop to the downside. Looks like it's due on the FTSE 100. But when that eventually happens, I don't know. But these areas don't tend to be untested, particularly when we're at near all-time highs. So technically speaking, I think as well, you could suggest that the FTSE is probably due and eased lower and economically, it looks like we could be kind of heading into a period where it could ease lower. Seasonally, selling may walk away kind of fits into the narrative. So I am looking for some weakness right across the board. And that
our new time by degrees situation, I'll call it a situation, suggested, I think it was the 24th, wasn't it? Was it 24th?
It might have been. We'll have to ask. I have to ask on Thursday.
Phil's not in yet. But 20, yeah, I better not say it because it may be incorrect. But yeah, he's looking for downside as well because of the time by degrees. So maybe, if I can find a way in, I'll join the party.
Yeah, join the party, mate.
But you found a way, so happy days.
Yeah, we'll see, mate. We'll see. And it's another, it's similar to the Swissy. The Swissy's been so strong that the suggestion is that it all of a sudden starts to take the baton and become incredibly, one of the weaker. Same with the FTSE. The FTSE 100 has been the strongest of the indices, certainly that I've got to trade on MT4. And it would then suggest that at some point this is going to flip. I mean, a buy in the Nasdaq would have been an opportunity to maybe sort of do a hedge trade, but I don't like the Nasdaq either. So we just got to do a kind of naked trade and just see if we can see some economic weakness and push all of the market down, dragging the FTSE down with it. But definitely, this area to me is pretty glaring.
It's very, very difficult when you see price just running away, to have the mindset that, okay, we are approaching resistance or we're at resistance, to actually switch off. And if you're in a trade, you don't need to switch off. You just need to tighten up a bit. But if you're not in a long, and you like we are waiting for this thing to turn around, we've spoken about the Swissy. We're talking about the indices now. But there's a whole bunch of stuff at resistance or support at the moment. And that's the time when my eyes light up, because that's when you're going to get the real opportunities to make 3, 4, 5 up to 10x. If you're patient and willing to get in at a small risk, like the 2 euro trades that I took last week, took them at 0.25%, and they're both gone. But I know if I continue to watch the market, both of those trades will play out eventually. It's just a matter of getting the timing right.
I think you're right, and you've got to be prepared to be stopped out a couple of times.
You do,
to try and find the bigger move, but it's going to come. It is going to come. But timing this thing's tricky. So you've got a choice. You either try and find a technical pattern and then wait for the economic data to follow, or you start to see the economic picture change and then look for a technical pattern after, which both are valid in my opinion.
There's other ways as well. You can put a massive wide stop if you want to, but that's not the way I like to do it, because the reward to risk becomes ultra difficult then. The market's got to move 30% before you make any money, and that's a tough ask.
I think when you're doing wide stops as well, you're almost kind of you need to look at a different time frame, don't you? If you're on a wide stop, then it won't be a wide stop on a daily chart, as an example. If it was a wide stop on an hourly, because you're then looking at a different bar to really trade off.
What are you on there? That's the daily, right?
This is the daily, So really, the stop should be at the highs on a daily.
Yeah, but if you're looking for a reversal, you've got to give it a bit of breath. Breath. Yeah, that'll do. So really, you've got to start thinking, okay, I better go to the weekly, or even, is that the all-time high? Yes, it is the all-time high. So why wouldn't I put my stop above there?
Yeah, well, if that was the case, you're looking at actually, it's not that far away.
No, it's not. It's not that bad. This is not looking at that chart.
Yeah. 1.5% for what could potentially be. Well, actually, maybe it's for maybe 1.5% for a 2.5% move. It's not bad actually. And for very little kind of stress in a lot of ways, you know, as this thing kind of starts to move around and fluctuate in this area. Obviously, when you're in the shorter term time frames, you've got to be able to take the pressure a bit more.
Yeah, sweat a bit.
But you know, even here, you could take your stops at the highs. Decent looking bar, this one as well. So tell you what, there'll be a lot of people that are in on this bar short and looking at the stops at the highs. That's a 44 pip move there, which brings us down to, it does bring us down here. Well, I'm going to have a look at this. If this does come down at this point, I'm going to have a look at it and see if there's any chance that we could push a bit further before making a decision on this take profit. I'll leave that there just in case I'm away from my screen. But if I come back and we're near here and the price action is looking like it could follow through, I might try and aim for a bit more, because the this bar here, measured move, and that's the most significant bar in this whole area. You know, this one so far anyway. And if you do a measured move off that particular bar, yeah, actually it's not as good as I thought. And that's because I was looking at spreading stops, but actually it's not that good. It's only a little bit further down, and I doubt I would risk that, you know, just a few more pips for that. But that does, you know, the bar does suggest that we should be able to get some profit here. And the other aspects are also suggesting that. So, you know, we'll see how it turns out, mate. But I quite like looking for downside in some of this risk right now. Aussie yen popping up, which is okay. Kiwi yen. Now, what I need on the Kiwi yen is for this to pop not a lot higher, but higher to make it worthwhile being stopped out. You know, there's no point in being stopped out in this area, and that's where it turns. This really needs to pop up. What I might try and do is see if I can get closer to this monthly pivot. See if price can get a little bit closer to that monthly pivot. There's some inflation data due out this week from Japan, which may be enough to kind of drive the yen a little bit lower for a period. But this looks good here.
Yeah, that's also the breakout of that previous range, isn't it? Yes.
Exactly. Yeah. So 82, 82 would be where I'd be interested in looking at this again, I think. But because here now it just looks like, what's the point of being stopped out? You know, you may as well widen up or don't put a stop in if you're just going to wait for it to roll over here. So I could do with a push now, really. But we'll look there.
Well, oh, that's Kiwi yen. I said Aussie yen. Aussie yen. I have looked at Kiwi. I have got a Kiwi yen chart.
Yeah, Aussie yen. It's probably. I'd be okay at the weekly pivot on the Aussie yen.
Yeah, as I said, the two pivots are there really close together, the daily and the weekly. So I'd love price to close on that weekly pivot or daily pivot today, or just even a little bit above it. Then I'm short underneath today's one.
Look at this one as well. A significant resistance point, significant there. It held, and it's become support. Now, if this remains as resistance, you know, and I probably would prefer the Aussie Kiwi. So I might well have a look at this one instead. And this is why having a trading buddy is so cool, because I probably would have ignored even putting any lines on this one. But now
you were looking at your FTSE trade while I was going through this one, and I pointed out those levels as well.
Cool.
As being excellent opportunities, perhaps.
Yeah. It doesn't look so good on the daily, but it looks good on the 4-hourly. Nice looking bar there as well. Yeah, this looks, you know, circa around here, I'd say 90. Around the 90 area.
90.29, I think, was the level I've got on my chart. Hang on a sec.
90.29. Okay. Problem is, it stops up there. 56. Yeah, you could drag a 2-to-1 if you get a decent enough entry here. 1929. Oh, if it gets there, cool. Goodness me, I'll be all over that one if it did get up there. Because then you could put your stops at the highs. Yeah, I like it. Well, that's where I'm at, mate. Anyway, risk off for me today. So that just kind of puts a group of things into play for me that suggest I should be looking for downside in indices and anything against the yen and possibly the Swissy.
Yeah, I'm not against any of that. But what I've got to wait for is probably double tops or bearish engulfings or head and shoulders or something like that, followed up by a lower high. And some of those are a fair way from there, but some aren't. I think I'll continue to watch the euro. I'll continue to watch CAD Swiss. I'll continue to watch anything against the Swiss because they're so oversold, in my humble opinion. And just a reversal followed by a confirmation will be absolutely spot on. Euro versus the dollar today has got nothing going for it because it's already tested the daily pivot. In fact, it's rejected the daily pivot and now looks to be back on its way to new highs again. It's just going nuts, the euro, for some reason. So, yeah, the higher that goes, I suppose the better I like it because it's going to come to a good price at some stage and it will sell off. So really, I haven't got much more than that. As I said, euro pound's a question mark. I don't know which direction to take on that. If it shows me, then I think it can move a long way. Gold, question mark over that again, but I do see I'll show you the two things that I see before we go. If you're wondering where George is today, by the way, guys, he's on holidays.
Gone to the motherland.
He has indeed. So three things actually I see on gold at the moment. We'll start with the most obvious, and I'll go a little bit wider so you can see the obvious. Still can't see the obvious. Go there. We go. Big double top on the weekly, which has been ruling the market until here, October of last year, at which point gold just took off, came back once to retest that breakout area, and then it went again. But it hasn't taken out this double top yet. So what phase have we got? 1, 2, 3, big retracement. 4, we've had 5 pushes to the upside. And I think that's enough for now, frankly. Monthly pivot looks to be staring me in the face. Probably the trade was, if I was going to take it short, and I wasn't that confident off that bar, that's the lower high. Is yet to prove itself, but the reward to risk wasn't a real flash because you've got to go through that level first before you get to the monthly pivot. So I'm looking for something, I don't know, on the daily chart, like I just described, like a reversal pattern or a confirmation of a reversal pattern. I've really got a bearish engulfing bar there, but where's my lower high? That's just consolidation there. Breakout to the downside, hit support in the trade line and came back off it. To me, we're probably in a buy area at the moment, but I've got no confidence in going through the pivots. So it's really, really tough. Slingshot tells me that if this goes below this level here, it's going to here, and I get that. But I think I want a better reward to risk to actually trade gold short at the moment because the everything I hear from the gold and silver proponents is very, very bullish. I know they've got a case or they've got an agenda, but they're very, very bullish. I also see 1 high that failed, 2 highs that failed, 3 highs that so far have failed. That leads me towards the break to the downside as well. So I don't know. A buying bar today, similar to what we discussed on what was that current? Or was it yen? Was it? Yeah, it was a yen. I think, and it'll be very much the same trade too. I believe if one sets up, they probably both will. So I think a buying bar today will probably get me interested in trading underneath it, but I'll take very, very quick profit to get myself safe, I think. that's on gold. But I am very interested in trading gold. I don't want to trade to the upside from here unless it gives me a false break. So under, back above, retest, then I join the party long, I think. But at the moment, I think the downside's where I want to be. So I want a buying bar today, get underneath it, and I'll be happy. That's about me.
Good stuff, mate. Yeah, that sounds good. That sounds good. Okay, just going to put my. See what I like to do at the minute as well is I've got my trading accounts which I kind of run as normal. But it just on the sideline, I've just got this demo account where I'm just sort of testing out some stuff in real time because after doing some work with Gordon and Lloyd, we're sort of, there's a lot of back testing that goes on, but I discovered that I'm not particularly good at getting the information out with back testing. So I like to forward test, in a way, and sort of like try and collate the information as we go. So I've just got this demo account running alongside what I'm doing, and just testing out different ways to exit the market or enter the market, which is kind of interesting.
I think with back testing, I think it's great, and it does develop ideas and it does develop systems and all the rest of it. The thing I don't like about back testing is it assumes you've taken every trade.
Yeah, that's right.
And that's simply not possible. It doesn't happen.
No. Would you know my biggest? Sorry, mate, go on.
And in particular for me, who sits in front of the charts for the last 12 months for half an hour a day, so I've got no hope of taking every trade.
Yeah.
And if that's the case, it bashes the numbers around quite dramatically.
Yeah. Do you know my biggest problem with it is because of what drives my decision, because I'm driven by seasonals, cotton, and fundamentals. If I was to have a look at the seasonals, cotton, fundamentals for every single back test trade that I was going to take, it would take me days to get through a proper, enough information. At least with forward testing, I know what they are on the day. And as you say, I'm in front of the charts at the time. So it's a genuine thing I would have taken.
Yeah, it's genuine. That's right.
Yeah. So yeah, that's my slight issue with it. But I'd encourage anybody to have a demo account running alongside. I wouldn't encourage anybody to trade purely off a demo account, because it doesn't add the financial aspect to it that you do need, because you've got to be able to get your emotions under control. But for actually testing out some visual aspects and some theories, it's really useful. Yeah, just a point to the guys in the room, really.
Yeah, look, should be a point to me as well. I always forward test live, like we're doing with the gold breakout, right? And oftentimes that can screw you up, because if you get, you might just make a slip and put volume of 3 instead of volume of 0.03.
Yes.
And you can find yourself in trouble very, very fast that way.
Yeah.
And then you suddenly got, oh shit, I've been entered. And you look at your what's it called, that thing, terminal. Holy dolly. What the hell I've done that a few times,
Yeah.
And then it's going in your direction. You think, I'll leave it because I'll make a squillionaire. And then suddenly, ka-chunk, and you're in deep SH1T, and that's not a good feeling at all. So I highly recommend that you check your risk when you're doing that forward testing live. So therefore, I think I agree with you 100%. Forward test on a demo account.
Yeah, very, very, very much. They're a great tool. We know they're provided to us for free, so why not use them? Anyway, mate, I digress a little bit, and you're not in Thursday, are you?
This Thursday I am. Yep.
Oh, this Thursday you are. Okay, mate. All right, amazing.
Yep.
All right. Well, I will see you then, and everybody in the room. Very quiet in the room. I don't know if everybody's okay out there. I hope you guys are all right and getting on with things, and I don't know, learning new stuff, whether it's from us or other people. But it'd be good to hear from you guys if you get a chance to move your fingers or come onto the mics. Up to you. But we'll be back Thursday anyway to do it all again, and Phil will be in with us as well, just to go a little bit, talk a bit about time by degrees, which could be another interesting session.
I went through last Thursday's presentation with him earlier today, and he's got a few explanations on that that may make things a little bit more sensible, but it'll all be brought back together, and you don't really need to understand the why with time by degrees. Just take it as what he's saying has been studied, researched to the nth degree, and it's absolutely valid, I can assure you. Anyway, it's interesting, if nothing else. And I learned a big lesson today about the magnetic pull of the Earth and what the sun actually means. We know the moon controls the tides, and the sun comes up in the morning somewhere and sets in the afternoon. But I've never thought really outside that what that amazing force that is around us at all times never goes away.
Yeah, I know. It's interesting stuff, isn't it? But when you sort of like bring it back to nature, I mean, let's not digress at the end of the show, but I mean, with all this stuff, I think it's something you can't ignore. As much as we kind of just like to go and stay in our own lane and our own box and say this is the way I do it and that's that, which of course we should do as well. But we should be open to other ideas and suggestions and opinions, because we're not going to be right about everything, and we got to be open-minded to understand that there will be something that we just don't know that might well help us. Might not, but it might well help us. So it's well worth kind of listening to somebody else's opinion. So looking forward to Thursday.
Yeah, me too. I created a mantra for myself many years ago, and it goes like this, and I don't always abide by it, unfortunately. Just because the other person has a differing opinion doesn't mean they're wrong, and we have to accept that. Yeah,
fair mantra, mate. Not simple, but a good message.
There you go. Copyright, Jeff Pine, 1974. Have a great week, everyone, and we look forward to catching up on Thursday. Thanks for being our trading buddies and for joining the show. Hope to see you then. Bye for now. Bye.